It's about that time of day again. My name is Joseph. Monday evening, July 16th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and of course, we can't forget about the mighty euro. Starting off tonight, crude oil is bearish with a strong and steady move lower today, and that tells me to look for either a spike in range or a spike in channel pattern for reliable selling opportunities tomorrow morning on the black gold. S&P is also bearish with a spike in range pattern of its own, and that tells me to look for selling opportunities using buyer failures and the two-try rule up at the highs of the range tomorrow morning. Nasdaq is bearish with a strong spike lower to finish off this afternoon session. Everything was perfectly fine until just a few moments ago. Well, that strong spike down tells me to look for selling opportunities using a spike in channel pattern tomorrow morning. Gold, don't forget the yellow metal. Gold is range bound with a triangle pattern tonight, and that tells me to fade those breakouts for the most reliable trading opportunities tomorrow morning. And don't forget about that euro. Euro is bullish but trading sideways with a range tonight. That tells me to look for buying opportunities using seller failures below the range low tomorrow morning. Boy, oh boy, we're back from a weekend, a summertime weekend. Hope you guys enjoyed your time away from the markets. We got some work to do. Big opportunities setting up for tomorrow. We get some big news this week, some big moves this afternoon, and as always, I got a great newsletter in store for you guys and gals tonight. Plenty of tradable opportunities setting up for tomorrow's session. Before we jump into those charts, though, and put the plan together for Tuesday, I want to remind you, if you're watching me tonight on YouTube this evening, you can find a detailed description of this entire trading strategy written out here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you're notified every time I publish another video. Of course, if you want to stay tuned with everything we do here at School of Trade, head over here to sidewaysmarkets.com. I'll put all the links in the description of the YouTube video. Head over to Sideways Markets and make sure you join our mailing list. In the upper left-hand corner, give me your name and your email address, and I'll send you an email every evening right when our nightly newsletter goes live. Also, don't forget, lower left-hand corner, if you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I'm always posting quotes, videos, charts, all kinds of great links, both regarding trading and just outside of the trading industry. If you're hanging out on social media, you're going to love follow me on social, lower left-hand corner. And how about those charts from tonight's newsletter? How easy is this? All the charts from tonight's video, you can have them on your computer for tomorrow, right where it says click here to download today's charts, right? Grab those charts and be ready for tomorrow. And speaking of tomorrow, what are you waiting for? If you're not a member here at School of Trade, grab that free pass in the upper right-hand corner and come out and join me in the trade room this week, right, on your free pass. Grab that free pass in the upper right-hand corner, and I will see you as a guest in the trade room. All right, let's jump right in. We got a lot to cover here tonight. Once again, hope you guys had a great summertime weekend. We've only got about a dozen of these things, right? We don't have that many of them every year, so hopefully you're making the most out of it. Beautiful weather here in Los Angeles. Tomorrow, Tuesday, July 17th, what do we have here on the schedule for tomorrow? Well, of course, keep in mind here, we are going into this 1, 2, 3, right? So you got OPEX, right? Got OPEX coming up here, third Friday of the month. That shouldn't affect us too badly. I think the biggest impact this week is going to be my boy Jerome Powell speaking at 10 o'clock Eastern time. This is your typical semi-annual monetary policy kind of testimony, right? So we'll have Jerome Powell, that's our Fed speaker right here in the U.S. He'll be answering questions in front of the I believe it's the Senate Banking Committee on Tuesday and Wednesday. Now, the most important thing that you want to be aware of this is that tomorrow is going to be the worst of the worst. What happens is on Tuesday, he'll have his pre-typed up remarks, and then he'll deal with, right, Q&A, and that Q&A will continue, right, on Wednesday. So it's usually the worst day is usually that first day of the week. We've had a lot of movement here this afternoon. We may see some range-bound markets because of it. So I am expecting after 10 a.m. Eastern time tomorrow, I am expecting things to kind of grind a little bit to a halt. It may not last very long. It may last the rest of the session. So get to it early tomorrow. And again, tomorrow probably going to be the worst of it. Tuesday, Wednesday will get easier, and then Thursday, Friday should be pretty good this week. So look for the tail end of this week to really kind of open up here for us. So we got Jerome, right? Our boy Jerome Powell speaking tomorrow morning, 10 o'clock, right? Eastern time. Again, 10 o'clock. Be careful after 10 o'clock. It will likely grind to maybe not a halt, right? But it will slow down significantly. We want to back off, see where those ranges are, and chances are you're going to see some ranges around that testimony at 10 o'clock on Tuesday and Wednesday. Other than that, though, tomorrow morning we get industrial production at 9:15 Eastern time. So, again, get to it early tomorrow morning. Right, with the House Banking Committee, they'll testimony tomorrow at 10 o'clock. It will start getting range bound. But you'll notice, though, we got news here all week here, right? 9:15, 8:30, 8:30. So should be a pretty good start to the session tomorrow. But again, watch the time closely because as of 10 o'clock Eastern time, I would expect we're going to see, right, a bit of a slowdown tomorrow morning. We won't know how long that will last, right, until we get there. So tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. Hope to see you guys there, and we'll execute the entire strategy right along with you guys. All right, let's grab some oil here. We're going to go oil, S&P, Nasdaq, gold, and of course, we'll wrap tonight on the euro. Crude is bearish with a strong move lower today, and usually when price action goes this far, this fast, in one day, the following day usually turns into a range. And so I would expect here for tomorrow, with this big, pretty much straight line down today on oil, I would really expect to see a trading range tomorrow morning, or maybe a spike in channel here tomorrow morning. If we see a double bottom at this low, then we know it's a range, and my plan is then to sell above the high of that range using the 2-try rule, right, and looking for buyer failures. If we get a spike in channel tomorrow, then I shift my focus to sell on the high of that, right, of that channel. Now, let's break this down. There's a lot of moving pieces on this chart tonight. First thing I want to remind you is it's about that time of the month, right? So I do want to remind you around the 18th of the month, we do usually start seeing signs of rollover. As of right now, I am watching the 818 and the 918 on oil. This will probably roll over Wednesday or Thursday this week. I don't think we're quite there yet. Again, what's today, the 16th? Yeah, so the 18th will be what, Wednesday? So, Wednesday, Thursday, I would imagine we'll be rolling over Wednesday, Thursday. So keep an eye on that as we get, right, closer to inventories on Wednesday morning. So we are watching rollover. And again, rollover will occur once we have more volume on that 918 contract. Now, bottom line right now is, right, if we strip all of this off, really all that happened today was we pretty much had a straight line down. Concerns over demand, right? Concerns about too much supply in the market. We even heard President Trump, right, and Putin in their press conference today, right, talk about, right, regulating the oil market as well. So there's a lot of talk about the economy slowing down later on in the year, demand, right, too much supply, et cetera, et cetera. And whatever the reason is, it really doesn't matter. We have a strong move down, and again, usually when we see a market just kind of roll like this, right? It wasn't a, well, you're going to see what a spike looks like in the Nasdaq in just a few moments here, but this was not the same thing as the Nasdaq, right? This is a very methodical, right, kind of rolling bear market today. It was very slow. It was decent volume, but for the most part, it was just kind of felt like your classic, right, kind of lull you to sleep, right, type of bear market here. Oftentimes when that happens, right, we end up going sideways the following day. So I'm watching for a spike in range so I can sell up above the high of that range, or I'm looking for a new lower low, and we'll call that a spike in channel, and we'll try to sell off the high of the channel. And of course, don't forget, right, sell that big trap above, right, the high of that channel, right? So really there are two basic scenarios that we know we're looking for. We have to assume there's not much else to work with, that they're hunting for that prior month open, right? That was the last, if you remember last week, we talked about those prior month levels. There's really nothing else down here, right, as far as any real milestones go. We just hit this, if you kind of zoom out on this sucker, right, we just hit this big low right there, right? So it's pretty easy to see we've kind of settled in nicely there, right? We know we're bearish. We know we have the strong move down. Again, usually though, when we see a situation like this, it'll usually start going sideways, right, the next day, or, right, give us that spike in channel pattern. So speaking of channels, we have this strong channel down, right? Now let's start adding these layers on, right? So as we add some layers now to this chart, right, the first thing we can see here is, let me zoom back in here, right? The first thing we can see here is got a nice looking channel, right? So we know this channel is going to want to pull back and retest that low. So my goal is to look for a nice big pullback here and retest that low. If I get rid of that channel and I bring this channel on, right? This of course is kind of like a hidden channel, right? Where we have that trend line being drawn down, bring it to the high here, right? That gives me resistance now, right, overhead. Now, that may not be very useful right now, but if this market continues to roll lower, that trend line may be exactly what we're looking for, middle to late morning, right, tomorrow morning, right? So if it does keep rolling lower, right, we'll look for that sell, right, up above those highs. The big thing though right now is, again, I want to kind of strip these things off here and really make sure we know, right, what we really want to look for here for tomorrow. So again, I'd like to see us go up and come back down, but really right now, this is one of those times you really got to kind of wait patiently here and see what we get. Again, if price goes up, price goes down, price goes sideways. So let's just play this game, right? What if we get price go up, right? What if price goes up here? If price goes higher here, there are going to be a lot of sellers, right, who are very interested in selling this market at the highest price possible. Hopefully we get the market to jump up. If we can get a jump higher here now, I'd love to look for a buyer failure. The buyers will try to buy the pullback, right, and reverse this market. We'll talk about that plan in just a second. I'm expecting, though, if we do see a strong move higher here, moving average comes over, right? And you'll see something similar to what we saw back here, right? You'll see the mark go above the moving average. The buyers will try to buy that pullback, and will basically look for selling opportunities into their stops, and then use that moving average as it comes over to sell right back down to retest that low. So basically, I'm looking for a seller failure pattern at the moving average. That seller failure pattern will almost always result in a strength move going lower. That strength move, I'm not going to chase after it. I'll rather look for that sell going off that moving average, right? So we get the buyer failure pattern, right, into seller strength. Don't chase the move lower, right? We'll also try to sell at resistance and look to sell right off that moving average, right? So that's if the price goes higher. Right, the price goes higher, looking for a buyer failure, right, seller strength into a seller pullback, and the objective is to go back down to retest that low, right? So that's your target, going back down to retest that low tomorrow morning. Now, what if we go sideways here? That is, if I had to guess right now, I would say that's probably what's going to happen tomorrow. There's no guarantee, obviously, but if we see this thing go up and then back down and then double bottom, once we see a double bottom in a bear market, we now know we're bearish, but we're definitely looking at a range now. So what I'll do is I'll mark up that high. That creates the range. And then my goal is pretty simple, right? I'll try to get the market to go up. And I'm going to use what I call the two-try rule. I'm going to want to see the buyers try once, pull back, buyers try twice. Once I see those buyers, right, one try, two try, then I'm looking for that sell going back down into that range, right? It looks very similar, right, to a failure pattern, right? So one try, two try, failure, back down in, right, to sell off the top of that range. So real simple plan there. The key is you're looking for that double bottom, right? Double bottom. And remember, guys, when it comes to double bottoms or double tops, it doesn't need to be perfect. It just needs to be close, right? Either a few ticks on either side, get that double bottom, find that high, and then we go up one, two, right? And then, of course, back down to retest that low from there. What if price keeps going lower? We're bearish. We could easily keep going lower here. Let's for a second forget about the potential for that range tomorrow. If we keep going lower here, right? Keep going lower. Keep finding those new lower lows. What's our plan here right now? If we keep on grinding lower, I'm going to mark up that new low up to that high, and my goal is to sell off the top of that high tomorrow, right? Selling off the top of that channel. And then don't forget too, right? You can always mark up those highs and look for a sell up around what we call the battle zone, right? Or the correction zone, right? Using traps, right? So we're selling the top of that channel. We're selling, right? We're selling, right? Using those traps up of the top of that range tomorrow morning, right? That will be if price keeps going lower. Now, last but not least, what's the plan here if we reverse, right? How do we trade reversal? What does a reversal even look like? It's going to require three things. And we call this the 1, 2, 3 reversal, right? The same technique happens during range-bound markets. It's going to be a 1, 2, 3 on strength. First, number one is a strong move higher. How strong? Strong enough to break through to a new higher high. Step two, I want to see a pullback to the moving average. Right? Got to test the moving average, right? Sometimes we don't test the moving average. It doesn't count as the pullback, right? It's got to count as the pullback. It's got to pull back to the moving average. 1, 2, 3, right? So now we got the 3, 1, 2, 3. Once we see that third leg, bam, big strong break higher here, right? I'm now going to look for what's called a spike in channel. I'm going to mark up these two highs, bring it down to that low, and look to be a buyer off the low of that channel, right? Does that make sense, guys? Pretty simple, right? Yeah, pretty simple there. Look to buy the low of that channel. Now, be aware there is a major level of resistance coming down overhead. So your goal will be to get long on that on the way up to, right, that big trend line waiting overhead. So again, we got a good plan here, guys. Strong move down. Do we double bottom and go sideways? If we do, we're trying to sell above that high. Do we go lower here, right? Do we keep going lower here with lower lows? Does that become a spike in channel so we can sell, right, the high of that channel? Or do we get lucky, right? Do we get a nice big jump up? Do those buyers here try to buy it, right? They fail, failure into strength into pullback, and pullback back down to retest that low. Or do those buyers 1, 2, 3 reversal, right? They take it in the opposite direction, and are we buying, going back up to the trend line, going back up, right, to where this party, right, stopped on Friday afternoon? Now, real quickly here, are you here for the first time today? Is this your first time watching my nightly newsletter? It's awesome to have you here with me, and we're gonna be doing this every night, Monday through Friday, usually around 7:30 Eastern time. Now, I know I'm covering a lot here right now, and I gotta move relatively quickly because I gotta make sure I get all this analysis into this video, right, without taking up too much of your valuable time. So rather than going too deep into each of the patterns, right, failures, strength, pullbacks, trap patterns, two-try rules, examples, all these different patterns I'm talking about right now, I want to give you a shortcut. In the upper right-hand corner, that way we can really slow it down and give you a deeper dive here. Grab a free trading course in the upper right-hand corner. Upper right-hand corner, right? Pause the video. Not to worry, I'll be here when you come back. Pause the video, grab that free class, and I'm going to teach you the nuts and bolts of this trading strategy. This is the same strategy we use every day in our trade room, right? And again, grab the free trading course, learn more about the patterns, learn more about the kind of the nuts and bolts, right, of this trading strategy. That way you can really participate with me every evening on our nightly newsletter. All right, let's keep going. So you get the plan there for the crude. Let's keep going about some E-minis. We got the S&P, and then, of course, we'll go to the Nasdaq. S&P is bearish with a spike and range pattern, and that tells me to look for selling opportunities using buyer failures up above the range high or a successful breakout pullback below the range low tomorrow morning. Now, as you can see here on the chart here tonight, it was a bear market on the S&P, right? They go up, back down, and what happens? Double bottom. We just talked about this, right? In a bear market, when we double bottom, what do? We call it a range. And then what do we look for? We look to sell at the top of that range. So a great example we just talked about on crude oil, right? You can also see that strong move down, right? Bear market. What happens? We go up above the moving average. Buyers try to buy the pullback, and look what happens. They fail. It sinks back down again. Again, an example of what we just talked about. We're looking for the sell on crude tomorrow. So the bottom line is oil, right? Oil may look a lot like this, right, 24 hours from now. So we'll see, right, how tomorrow goes for oil. In the meantime, though, strong move down, double bottom. We know we have a range. Now, what's the plan for a range? The plan for a range is to buy low, sell high, and avoid the middle, right? Avoid the middle, right? That's the overall plan when it comes to a range day. Now, we have a bear bias here, which means in all reality, the odds are stacked in favor of the sellers here until something changes tomorrow, right? For all I know, Senate Banking Committee tomorrow morning, something happens tomorrow morning, and, all hell breaks loose and things stop, right? Things turn and go bullish. So although I can't predict the future, right, I know for right now, we definitely have a bear market into a trading range. So I'm looking to sell high, right? Selling high will always be our best bet. I want to go back to the high of that range now, and we're basically looking at the same exact pattern we saw back here, right? Up, one try, two try, right? One try, two try, failure back down, right? We got one try, two try, failure back down. One try, two try, failure back down. Remember, I like to see the one try, two try, use that moving average, right? One try, pull back to the moving average. Two try off the moving average, and then failure back down again. Now, how about the lows here right now? Can I use the same strategy for the lows? Can I go one try, two try, back up? It's not really the way they like to do it because we're bearish, right? So I can take a buyer failure. This is very, very important. I can take a buyer failure pattern, right? One try, two try, buyer failure pattern. Again, learn more about the failure patterns in that free trading course in the upper right-hand corner, right? Again, you will not be disappointed on that, right? So I can take a buyer failure in a bear market, right? But a seller failure, right, in a bear market, what I'm looking for is, I'm looking for this instead. I want to see us go up, and then I'll sort of buy that pullback from there, right? That's a much more reliable trade. Again, we're going against the overall trend, but it's a range, right? So we're probably going to rotate, right? Up, one try, two try, back down, one try, two try, back up, right? We'll probably end up rotating back and forth inside this range. It's a buyer failure off the high, buyer failure, right, into seller strength, right, into a bear pullback, buyer failure into bear pullback, right, off that high. You might not get the bear pullback pattern. You can see we didn't get one right there, right? Sometimes it just collapses all the way down. And then as we go lower here, right, it's one try, it's two try. Sorry, get the moving average to go here first. right? It's one try, it's two try, and then remember, you got to make sure you're buying as close to that low as possible, right? So as we go higher here now, right, resist that temptation to chase after it and look to be that buyer, right, down around those lows. Okay, so once we see those sellers try once, right, try twice, then we look for those buys going back, right, going back up now, right, to retest that high. Again, be careful with the failure pattern, right? Look for those buyer pullback, right, after we see, again, one try, two try, and then back into that range. Then we're trying to buy right off the low of that trading range. Now, what if price goes lower? Beautiful example here. I take the size, right? I take the size of this range. I project it up to find resistance. I project it down to find support. Oh, well, look what we have here, friend. We get a measured move hanging out down there too. So now we know there's a lot of support here, right? There's a confluence level down here, right? What's a confluence level? Well, anytime we have two or more levels lining up around the same price. Again, it doesn't need to be exactly tick for tick, right? Like I mentioned earlier, right? These were not exact double bottoms, but they were really, really close enough, right? So again, you could call this a triangle if you wanted to. I'm going to call it, right, a range. So here's the thing. If we go lower, we know where the seller's objective is, right? You always want to ask yourself, who has control? Where is their objective? And then where are we in comparison to the objective? So for example, if we make a run lower here, right, we're bearish. Where's the objective? The objective's right here. Where are we in comparison to it? We're right knocking on the doorstep, right? We're right there about to run into that objective. Not a good place to be selling. What I need is, I need to break out what I call the fake out, breakout, pullback pattern. And I apologize for the acronym here, right? The FOBO PB. But basically, we talked about this earlier, right? One try, two try, back into that range. Knowing this now, okay? Knowing this, here's what I'm looking for. I'm looking for a way to catch those buyers getting a little bit too aggressive, and here's how I do it. I look for a strong move down. How strong? Strong enough to get that moving average below the low of that range at 95.25. Okay, then I'm looking for a two try pullback or a two-legged pullback here. One leg, right? Two leg. And the reason why I like to see a two-legged pullback is because, like I mentioned before, buyers are going to try to cheat a little bit. They're going to see this thing pulling back once, twice, right? And they're going to try to buy this thing going back into that range. Okay, now we know where the stops are. And because we know where the stops are, now we know where we can sell, right, directly into, right, their stops for that move down to that measured move. Make sense? Okay, so again, it's a strong move down. How strong? Strong enough to get the moving average to come down. Two-legged pullback. And I want you to sell as close to that low as possible, right? And then bam, back down from there to finish off that measured move. Now, sometimes things get really crazy, right? Let's say, for example, we run lower here all the way down to that measured move. If that's the case, just look left, right, and just sell high, right? If it's strong enough, if we're strong enough, right, to make that move and go straight down to that measured move without pulling back, then that tells me we have a lot of momentum on our hands. We're going to find those swings and look to sell as high as possible for a double test of that measured move. Now, last but not least here, how do we turn bullish? How do we turn bullish? Well, look back here. Strength, pullback. See what they failed to do? They couldn't take it, right? We need those buyers to take it. Strength, pullback, strength. I don't care what direction I trade in, and neither should you. Okay? Don't get married to momentum, right? It's going to change the minute you're committed to one side of it. It's going to change on you. Once we see that 1, 2, 3, right? Once we see that 1, 2, 3, then I'm looking for those buying opportunities now, right? Coming off the low of that channel, right? And heads up, they're going to want to go back and retest that high, because look where we are here right now. And this is a really important thing. I'm a day trader, so for me, I look at just a day time frame, right? I'm not looking at the big picture here. I'm looking at short-term momentum. But it is not difficult to see, right? I'm sure some of you guys are going, well, wait a second, the overall trend is bullish. You're exactly right. And we could easily see this now as a double top. This is a range, and this could easily go lower and then run, right? So we do have that in the back of our minds for tomorrow. We're not going to know, though, until we see it actually show us some proof. The buyers had a chance to hold here, they failed. Hold here, they failed. Hold here, they failed. You're absolutely right. Maybe we're just pulling back to get a lower price, right? Maybe all we need is a little bit lower price before this thing goes higher. Well, wonderful. The problem is that I wasted so much time early in my career thinking we might get this, that, or the other. What do we know right now? Okay, forget about what might happen tomorrow. What do we know right now? One of the biggest lessons I learned in the first few years of my career was not to get roped into these big, weekly analysis. Of course we're long-term bullish. But are we swing trading here, or are we day trading here? That's the problem, right? If you're day trading, what happened today? That gives me structure I can use for tomorrow, right? If I'm swing trading, then instead of the day, I look at the prior week. Okay, we'll go into more of that, right, when we get to that point, right, in our intermediate and advanced classes here at School of Trade. For now, though, we're bearish. But again, I'm not lying, right? I will definitely looking for that move 1, 2, 3. If it runs on strength, sure, let's do this. Let's be a buyer, right? But it has to show me that bullish strength first, right? And write that down, okay? I don't care how long the long-term trend is. You know what they say, right? Bull markets keep buying pullbacks until they don't, and then they turn bearish, right? Who am I to tell right now this market is still a bull? It's a bear market from what I can see. Again, on a day trading time frame, right? Bull markets will keep on buying dips until they don't. And then all of a sudden, we wake up one morning and all of a sudden, whoa, right, this is a bear market. Now, speaking of, right, bear market, whoo, boy, that Nasdaq. Everything was going fine this afternoon, right, with this price action rotating back and forth inside the bear channel until Netflix released shockingly low earnings, which surprised everyone, including the company itself, and sent prices really just screaming lower here tonight. Now, what do we have here? We have a bear, right, a bear market. It's a spike, right? The spike is the big clue. Now, if you're wondering, well, what do we do? You don't, right? This is such an out of the blue, right? Such a strong move here now. The only thing you can really do is wait for one of 4 scenarios. A spike is what we have. Either a spike in channel, a spike in range, a spike in wedge, or a spike into a flag pattern. No matter which pattern we see, the goal will be to sell at resistance tomorrow. So real quickly here, there are basically 4 scenarios when I see a spike. There's a spike in channel, which is by far the most common, right? Spike in channels tell me to sell off the high of the channel. There's the spike and wedge, which is not nearly as common as a spike in channel, right? Similar situation, sell off the high of the wedge. There's a spike in range, which of course is what we kind of think is going to happen on oil, right? Spike in range. And then of course the flag pattern. Flag patterns are by far the most difficult because they're highly counterintuitive, right? They kind of go against, right, our instincts because we have this bull channel that forms after that spike down. These are the 4 scenarios, right? All 4 of them tell me to sell off the high of the channel, sell off the high of that wedge, sell the high of that range, sell, right, the high of that channel. So really at this point on the Nasdaq right now, there's your chance to grab a screenshot here, guys. I teach a lot more details of these, by the way, in that free trading course. Right, you can see examples of pretty much all of those patterns in that free trading course, upper right-hand corner. And of course, we trade them every day in our trade room. So here we go. Strong move down, right? Do we go up? We should go up. Do we lower low? If we see a lower low, then spike in channel. Sell the high of the channel, right? What else? Look for traps, right? Sell above those highs. Back down again, right? Sell the high of the channel. Sell the trap high. Okay, or do we pull back and then move lower and double bottom? right? Do we double bottom? If we double bottom, we find that to be a range. Now we look to what? Sell the high of that range. How do we do that? Failure patterns. One try, two try, failure, back down. Fake out, breakout, pullback pattern, right? Do that low. Do that low, right? Fake out, breakout, pullback pattern. We just talked about these, right? Failure pattern, fake out, breakout, pullback pattern. Okay, what else we got here? How about a wedge? Right? Wedges can be tricky. We go lower. What happens is with a wedge is you get that lower low, right? That lower low says it's a spike in channel. Okay, so you draw your channel. But then here's the trick to a wedge. It doesn't rotate all the way to the top of that channel, right? So now you go, oh, okay. So apparently it's not a channel. Apparently it's a wedge. And you sell the top of that wedge. When the wedge gets really narrow, very important, right? And again, this is where I could go a lot deeper into this topic, right? But I'm going to ask you to join that free trading course in the upper right-hand corner. I can go a lot deeper into wedges because there's a lot going on wedges that you want to be aware of. But grab that free course in the upper right-hand corner. You'll learn more about wedges. The key to this now is I can still use, pay attention here, I can still use that channel now, and I can now up and back down again. Right, so wedges are a little bit tricky because, again, they almost start as a spike in channel, but they usually, right, finish with that wedge, right? And the goal, of course, for a wedge is to get down to the vertex, right, where that wedge top and wedge bottom, right, comes together right there. Right, that's the plan there for a wedge. And then you've got the one that really is the hardest. That's a flag pattern. Strong move down. Now, instead of double bottoming or going lower here, now we fail, right? And we get a higher high. Sorry, higher low. Once we have that higher low, now you're thinking flag, right? See the difference there, right? So it's spike and channel with a lower low, right? Spike and channel or spike and wedge, right? A double bottom is a trading range, sell the high, right? If we don't get a double bottom, in other words, if we see a higher low, right? Higher low on the chart, right? That higher low says find that new channel and we're selling the high, or we're selling what we call the breakout pullback, right? Below that low. Sell the high, right? Or selling that breakout pullback down below that low. Okay, wedges can be tricky because flags can be tricky because you really got to be careful. You don't want to sell into, right, that rising support. You want to sell up at these highs. That's why I say these are by far the most challenging, right, these flag patterns, because they really, well, what happens is we see a market that will run lower and then it kind of grinds its way higher, right? It's not giving us the 1, 2, 3 reversal, right? 1, 2, 3, bam, right? If it does this, 1, 2, 3, bam, right? Big reversal, 1, 2, 3. Remember, right? Remember, it's not enough to get a strong move higher. It's got to hold and go. Once we see that 1, 2, 3, right? 3 is gone, right? Once we see that 1, 2, 3, now we've got ourselves, right, a bull market. Then we can go out, right, and find this as a new bull channel, and we can buy the low, right, of that new bull channel. What happens on flag patterns is they slam lower, but they never really get going, right? They kind of grind right up, and eventually this thing heads right back down again. Now, good question here. Where's our target going to be, right, if we do see this thing push lower here? Great question. Another benefit of a strong spike is that those spikes can be used with what's called measuring spikes, right? And that means this becomes your A, that's your B, this is your C, right? And there's your D, right? There's your, right, measured move, right, off of that measuring spike. Okay, so take the size of that big leg down. We don't quite know how far we'll get for a pullback yet, but that will determine how to calculate, right, that measured move target we're waiting for down here for tomorrow. Now, yes, I won't disagree with you. Big drops do equal big pops, But be very careful trying to predict that big pop right now. It's much better to wait for a market like this, right, to turn on strength, right? So 1, 2, 3 reversal. That's going to be your cue now going higher. You can gamble right now, but usually right now, you try buying a market like this, you'll get a little bit out of it. It will come right back down, stop you out, and then make you pay because you'll be missing those great opportunities here to sell high here. So that's the plan there on the Nasdaq. Let's keep going here. Running late on time here. Boy, it's already 40 minutes into this video. You can see why I've got to move quickly here this evening. How about some gold? Gold is range bound with a triangle pattern, and that tells me to avoid the middle, buy the low, and sell the high, focusing on failures using that 2-try rule right tomorrow morning. This is one of the easiest types of ranges, right? And I have a great detailed chapter in our free trading course on trading ranges. Grab that free class, upper right-hand corner. You will not be disappointed there. You're going to want to learn this pattern. The most important thing about this is we got lower highs. We have higher lows. I want to buy low, I want to sell high, and I want to avoid, right, that middle, right? That's what we call the no trade zone, right? So no trade zone in the middle, right? Battle zone, buy low, sell high, stay away from that middle. Now, how do we do this, right? How do we do this here? Focus on the edges, right? Focus on the edges. Basically, where we pivot off of this triangle, right? Those are the magic areas, right? Now, most important thing now is stay away from that middle, right? I want to go down, get outside of this range. You've got to remember this range gets narrower by the candlestick, okay? And what happens is the narrower the range gets, see, I'm okay to buy here because my profit target's the opposite side of that triangle. But we go a little bit narrower now. Are you really going to want to buy there and take that little profit? No, probably not. Please say no. That is not a wise trade because there's not much profit potential. The best trades you're going to get, if the market's bullish, they're going with the bull trend at a level of support and where we can have a big wide open space for a nice big target. You got to remember, you can easily increase the odds of your success if you focus on buying at support, selling at resistance, and when you do that, you trade in market conditions where you've got some open space for a nice big target, right? The open space is big here, right? But as we get closer, that open space gets smaller, and when it gets smaller like that, we usually see big breakouts. Why? Because buyers and sellers want to look to trade at a wider area, right? So if we're trading inside this range, really tight, really narrow, people are going to back away. And when they back away from trading it, it'll pull back, and then you'll see the real professionals in the market jumping all over this to get it going back up right into that range tomorrow. All right, guys? So how do we trade it? Failure patterns. 2-try rule. 1 try. Moving average, right? Moving average comes over. 2-try. Off the moving average, right? Now we know where stops are, and we can look for that failure. Failure leads to strength. Strength leads to pullbacks, and pullbacks going back up into that range. Okay, so the exact same thing here. 1 try, 2 try, failure, strength, pullback, back down. 1 try, 2 try, failure, strength, pullback, right? Back down. You can see examples of those patterns everywhere. They happen everywhere, right? So 1 try, 2 try, failure, strength, pullback, back up. 1 try, 2 try, failure, strength, pullback, back down. Notice I'm not trying to sell the first try, right? Because there's no telling what's going to happen, right? 1 try, 2 try. See, this one, you got lucky. Yeah, you could have put your stop up there, right? You could have put your stop up there and you would have survived that. But that's not going to happen every time. 1 try, 2 try. A lot of times the 2-try rule goes through to a new higher high, right? Now, it doesn't explode, right? Which would be what we call a successful 1, 2, 3 breakout. 1, 2, 3, boom, big breakout, right? Back here, 1, 2, Oh, no breakout, right? 1, 2, it's got to strong, right? It's got to be real strong in order for us to be confident to trade that breakout, right? So 1 try, 2 try, failure, back down, right? 1 try, 2 try, no, boom, right? Failure, back down, right? 1 try, 2 try, bam, big strong breakout. Now we have the breakout we can trust. Now we go out and look to buy the low of that channel. All right, guys. So stay away from the middle. 1 try, 2 try, gone. 1 try, 2 try, back in. What's the breakout look like? 1, 2, 3, bam, right? Big strong breakout, right? It's going to be alarmingly strong, right? That breakout will be, all right? You'll know it when you see it. Anything else, look to fade it back into that range. Wrapping up tonight here on the euro. Euro is bullish with a spike in range pattern. That tells me to look for buying opportunities using seller failures down below the range low tomorrow, or a successful breakout pullback, right? So we know here we get a strong move higher. This could easily be a short covering rally. If you recall, right, early in the month, we saw that big kind of structure high there around that 18,500 area, right? So we're definitely looking at, right, these areas here for targets going back up to retest highs, right? Possibly later on this week. As of right now, it's a little bit too early, right, to call that to be your big target here, right? But again, later this week though, absolutely. Strong move higher here. Now, anytime we see a strong move in one direction, right, we look for what? A pullback and a retest. There's your double top right there. Remember, double bottom in a bear market, double top in a bull market. Now what do? Right? We find the range. Okay? What is it? A bull market into a range. What are we doing now? We're looking for that 1 try, 2 try, failure, back up. Right? 1 try, 2 try, failure, back up. Or what else? Fake out, breakout, pullback, right? Strong move up, 2-legged pullback, continuation. Remember, get the moving average up above that high, right? That's going to force this market to really be strong, right? See, what happens is we see this all the time where it'll jump up, pull back. It's not strong enough, and the moving average never clears the high of that range. So what happens is we kind of get stuck, and then bam, we end up collapsing back down. 1 try, 2 try, and look to buy off that low, right? So again, 1 try, 2 try, failure, strength, pullback, back up. Big strong breakout, 2-legged pullback for the buy, right? On that again, right? On that fake out, breakout, pullback pattern we talked about earlier. All right, guys? Again, running a little bit late on time here right now. A deeper dive, don't forget, right? Grab that free course in the upper right-hand corner to learn more about the fake out, breakout, pullback, to learn more about these entry patterns. Last but not least, how do we reverse? 1, 2, 3, reversal, right? 1, 2, 3, strength, pullback, strength. New channel, find that channel, sell off that high. Where's my target? You got it. Down at those lows, just below 16,700 here for tomorrow. Again, as I mentioned earlier, tomorrow has the making of being one of the more difficult days of the week tomorrow because of the Senate Banking Committee, right? Testimony tomorrow morning at 10 a.m. So keep your eyes on the time tomorrow morning. Get to those trades early. And don't forget, I've gone over a lot here tonight. You don't need to do this on your own every day. Come out and join me. I'll be in my trade room tomorrow morning, 8 o'clock Eastern Time. I hope to see you there. I got a great free trial on the homepage of our website. We got beginner, intermediate, and advanced levels of membership right below my ugly mug on the homepage here. And don't forget, if you have any questions, hit me up on live support. I'm always standing by to answer all your questions. Grab that free trading class as part of our free trial. Learn more about becoming an advanced member. I'll put all the links in the description of the YouTube video. In the meantime here, hopefully you guys enjoyed the weekend. It's great to be back here with you guys again. Big day setting up for tomorrow. I look forward to seeing you same time, same place tomorrow morning, 8 o'clock Eastern Time. If not, come back and see me tomorrow night, same time, same place. We'll do it all again for tomorrow night's edition of our nightly newsletter. My name is Joseph. Thanks for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.